What's up, NQ Chef here. Today I'm going to talk about the trade I took Friday, May 29th, which from recording this video was yesterday. I'm just going to take you over the steps, how I was looking at this trade, what I took, and I took a break even and a loss. And although I have my targets are on point, I actually lost the trade because of my break even, my psychology. I'll just start going through it. Relative equal highs over here. I already know how everything went, but just showing you how I was looking through this trade. Market open, we're bullish. Let's see, 930. True open. Mark out new day opening gap. Close to open, right here. Like that. Boom. We have new day opening gap and dog. We have price tap into 25% first quadrant and we react off of it right away. And we took out highs over here. Keep that in mind. Check out those highs. For my model, I'm looking for highs to be taken out, and then I'm looking for a reversal. So we haven't shown that yet. But we did react off of this end dog over here. I have a 5-minute bullish here that we can mark out. Make that green. Let me see. Price just going up slowly. At this FVG respect over here. Volume imbalance right there, yeah. Work that out. Respected beautifully. Then we have this one right here. Also respected. So price is just going up. Now we're at an all-time high, so we're not going specifically towards a direction. Just going up. Price continues up. And then we have this area. See these wicks? These wicks can be a sign that we're reversing. You know, after we create buy-side delivery, you could have what's called a smart money reversal. This in and of itself isn't much, but we need something more to confirm it. FEG over here, this imbalance. Bearish. And I'll show you the trade I took. So when we got up here, what I was thinking is, okay, if we're going to start making bearish moves down now, I want to see inversion of this imbalance and this FEG over here. Well, you know, if we have imbalances in between FEGs, we want to mark it out, not from the wicks, because even the wick doesn't even go here. Mark it from this wick to this close, because you have volume imbalance here. Same thing we did here. From this wick over here, can't really see because they blend in, but not to this wick, to this imbalance. That's what ICT teaches. You only train ICT. Respect. This 1 minute. Boom, inversion of this. I saw this. I was like, okay, we need to enter. Boom. So what I did, I'll play out what I did, because I want to show you my trade recap. So okay, I put my sells over here. Stop loss above this order block and within this FEG. And my TPs were going to target these 9 AM lows over here. Let's delete this. Why the 9 AM lows? It aligns with fourth quadrant, new day opening gap, the fulfilling of it, potential reversal area. I'm going to show you exactly what I did for this trade. And look at that. For all those people that are obsessed with risk to reward, that's a pretty big one. Oh, RR. Look at the RR. Look at the RR. Look at the RR. But I'm not obsessed with RR, personally. So let's see. We get entered, inverse this, and here's why I went break even when we got to here. Here's my thinking. We're on this 5 minute over here, and we're in this, this candle didn't close yet, but we're in this 5 minute, and then there's this 5 minute that's in the way. Right, that's what I was thinking. I was seeing this bullish structure over here. I was like, is it wise to short this? We're in all-time highs. Is it wise? But here's why I entered originally. Remember, we got highs taken out here, relative equal highs over here. All of them, beautiful. We have lows over here, also relative equal lows. From London to over here, New York. You can just mark out both of those. You have these two liquidity pools, this whole area that has not been tapped into. Just left it hanging there. Didn't give a shit about it. So we see price inverse, the only real bullish FEGs we had, this one, and we see these strong closures of candles. This specifically, right? But my mind was thinking, okay, we have this bullish thing, and the main reason was I don't want to lose. That was my main thing, is I don't want to lose, because the day before I also took a loss. In similar circumstances where we also had a bullish structure up, and once we had an inversion, I took a short, but we just kept going higher. So this is why I was also hesitant. Alright, now look. Now it was this candle that waked into here, and here on the 5 minute. And here I lost my confidence in shorts at this point already. I was like, oh, okay, well, damn it. Here I get stopped out, and boom. Let's have this marked out as well. This 1 minute order block. Oops. 1 minute order block. That respected. Let me inverse here. This is 1 minute order block. Now, though we inverse this one, what does our model say? We took out highs. We want to go back down eventually. We got this little confirmation here that price didn't want to close higher. We have this 1 minute respecting. So this is just a retracement. This is just a retracement. And look. We go down. We inverse this whole 5 minute FEG over here, which you can mark out. 5 minute IFEG. Right? Did I do that right? No. There you go. Wait a minute. Yeah. Continue going lower. Go into here. Remember this 5 minute we got marked out? Reach 75%, third quadrant. And this is where many people got trapped for buys. They think we're going to reverse off of here. But, because look, we took out these lows. We're in this 5 minute, reached 75%. And now we're showing some bullish structure. some people that did this. Well, I don't know where the fuck they want to target. But look, let's mark out this order block. Is there a 5 minute? Not quite. Five-minute price doesn't even tap into this. Actually does. One tick, about 1022. We're in this 1 minute order block. Why I was looking at this and I was not worried that we're going to reverse here. We didn't fill gap and we didn't take out the real lows. We didn't take out real targets. The real liquidity is resting below here. It's resting below here, below these relative equal lows. That's where the real liquidity is. So the market, it doesn't want to reverse here. It wants to reverse potentially of this area or just start accumulating at those areas. So let's see what happens at this 1 minute order block. We also have another 5 minute inversion over here. Just more confirmation that we're on a bearish downtrend. Why is it different colors? Fuck it. Oh? No. And boom. My targets would have been hit that day. Let's see how this plays out. Look, we even go lower. Because where's the real liquidity? Below these prominent lows. What ICT teaches 7 to 9 a.m. He teaches to target those areas of liquidity, those highs and lows. Now look. And from here, what do we do here? Because I know what happens. Right here, we just start to range. We just range. Go up a little bit, but we range. This is when it fizzles out. Beautiful. ICT is brilliant man. Brilliant man. Everything I showed worked. Here, let's back up. I want to show you how that trade would have gone if I wasn't scared, if I stuck to my motto, if I was stoic. Boom, inversion, enter. Because why? Why do we enter? Because my model says so. My model says so, not because my feelings say so. Entered. Oh, and there's something else I forgot to show. Boom. And it would probably been about here, within this area, that I would have moved to break even. Or at least when we gone here, stop loss over here. And at this point, I would have moved to break even. Easy. And so I took that break even, but I did something even worse. I saw this, so I took this trade. Boom. We got stopped out because you were break even there. Now, what? Actually, I can just delete it now. But my mind, because remember, I saw these 5 minutes. I said, oh, okay, we're bullish. We're just going to now go to the moon again. We're just small little retreats before going up. Because the other day, that's kind of what happened. But one thing is, we didn't have a structure like this. We had nice candles up. Nice bearish candles up. Not like this. Not staircasing. If you guys want to correct me, if I'm wrong, put it down in the comments. I love to be corrected. I love to learn. I'm not ashamed of it. But that's how I view it. is I don't see strong bullish structure for us to continue higher. Yes, you have a 50-minute, but if we go down the 1 minute, it's choppy. Choppy. Again, it was this one, this FVG over here, plus imbalance, and this one. But I got scared. I got scared. And in my mind, I was like, oh, this FVG, which over here, look at this imbalance right here, it got inversed. You guys already know what happens. Let me take this. I think I did, how many, no. I don't remember my stop loss was, something like here. Targets, not even sure where I targeted, in all honesty. Don't remember where I targeted. But I was like, oh, we have this inversion over here. We're going to be bullish. Here's one thing. And it was already at this candle. I was like, oh, well, fuck. Well, fuck. What I did here is my mind, my model was telling me, go short. Go short. Why do we go short? We have new day opening gap that wasn't filled. We had 9 AM lows aligned with the 100% of it, and we took out relative equal highs. This buy side delivery is done. We had confirmation that we're going short, disrespecting this bear structure, this inversion as well. What else do I need? This is my model. If I lose, I lost. But it was a logical entry. Not emotional, it was logical. So what I did here, I fucked up. And within 3 candles, I got stopped out. And I watched price run to my motherfucking TP. Like that. I switched up my buys entirely. Not carrying my model. If anything, I should have just not taken this at all. Like I should have taken that BE one. I should only take 1 trade per day to minimize risk. I should have been watching this, okay, like not panic enter. But what I want to show you is how your model will always work. If you have a certain set of rules that you follow, liquidity, PD arrays, macro times, certain time of day. Another thing I forgot to mention. We're in macro times over here. So 950. Where's 950? 950 over here. 1010. I'm actually kind of leaving them, but not greatest example, I guess. We go down, go up, continue downwards. It's very simple. Circular psychology is gonna get the best of you, like it did for me over here. I would have been one and done. This would have been $1,500 trade. $1,500. And let's over here. What was my entry? Stop loss here. Right here. 618 ticks. For the nerds out there. 5 RR. For the nerds. Is this completely fine? 1,000,000,000%. Do you have any 5-minute entries? I don't think so. Could have even entered here. You're ballsy enough. But here would also been the entry. But for me, I want to make confirmation that we're going bearish. Personally, this would be whack. You're mental if you do this. Anyways, thank you guys for watching. I'd appreciate a sub. Stay tuned for the next video. And Q Chef out.